Wanted to welcome everybody out. Thanks for being here. We've got a lot of representation here. A lender, a home inspector, title attorney, real estate agent, here to answer some questions. We've got a few prepared, and then afterwards, if you have some specific questions you'd like to ask, you can feel free to ask us directly, or take one of our cards from the table back here and just shoot us a text or call, and we'd be happy to help you out. So we're going to kick it off with Matt Helton. He's going to talk to us a little bit about the lending process.
Thank you so much.
Absolutely.
Well, guys, thanks for having me. I'm going to talk about a very exciting topic, getting a mortgage. You guys didn't get too excited.
Yay.
All right, awesome. That's what I hope to hear. Well, thank you guys for having me. What I like to do is just share the process of how you would get going in the mortgage process, but I'd also like to share with you some of the challenges that's going on with the market right now. The mortgage process is pretty simple in today's world. It's really just step number one is gathering your information. So we do that one of two ways, either a phone call. Most people don't like to come in. After COVID, no one comes into the office anymore. So it's normally a phone call, or you can do an online application to get the basic, where you work, how much you make, basic info, and then upload your documents into the portal. We review those and we can tell you payments, price ranges, how much you qualify for, what type of loans, down payment options, can kind of go through the whole thing. So that's kind of a lot of the questions people have at the beginning. I know some of the questions I think that were submitted we get from time to time is, number one is, are there any low down payment options? We get that quite a bit. And there are options. If you're a first-time home buyer, there are options for as little as 0 down. So those are still available in today's market. So we get those questions, but the biggest questions that we get in today's world is, how do I get my offer accepted? There's lots of bidding wars out there, and it's really challenging to get your offer accepted. So we have 2 or 3 ways that we do that to help clients get their offers accepted. The 2 different scenarios are, number one is if you already own a home. The challenge is, how do you get your offer accepted without having to sell your house, that we run into. The second big question is, if I don't own a home, is there a way I can compete with cash offers? We get those questions a lot. How are you guys?
Good, how are you?
Good, thanks for coming. So I'll talk about the first one. So if you don't own a home, who's heard that there's lots of cash offers going on right now? You guys heard that? Lots of cash offers in the marketplace. So we have an option where even if you're not a cash buyer, you can put in a cash offer. So what it allows you to do is to be able to submit an offer all cash to be able to purchase your home. It allows you to compete with all those home buyers. Now, it's not a free lunch. There is a little cost involved. How it works is, you would submit an all cash offer. We would work on a mortgage behind the scenes. To the seller, they're really excited because they know that it's a guaranteed cash offer. And as long as we can close your mortgage at the same time as the closing date, it only costs you an additional 1% of the purchase price. So basically how it works is, if you're buying a $400,000 house, once you get to closing, you'll pay all the normal closing costs. You'll just pay an additional $4,000, additional 1%. So basically, most houses are having 5, 7 offers. Most sellers are taking at least half the offers that are getting a mortgage, and they're putting those aside if they have multiple cash offers. So you automatically, for an additional 1%, kind of take your offer to the top of the stack. Does that make sense? So what I like to say is, it takes the people that have some of the money. You have to have some money, but it allows you to act like you have all the money. Kind of allows you to act like a cash buyer. Just gives you some extra leverage in this market. Any questions about that?
You still have to do an appraisal?
Yes. You have to do an appraisal, but the actual program will allow you, they do a online appraisal before you go see the house, and they will tell us the maximum offer that they'll allow us to offer. And then if you'd like, you can even go 5% over that. So there is some flexibility. So that's one way you can compete. Work closely with Brandon on that. And then the second way is, if you own a home, the challenge would be to be able to sell your house, and for a seller to take your offer. It's called contingent, meaning that they'll take your offer, but your offer is only good if your home's sold. A lot of sellers don't like to take those. So we have an option where you could do a bridge loan. So what that would allow you to do is, we'll get you qualified as if you've sold your home, assuming it's going to sell, We have one now, for example, we can get creative with those. So we have a middle-aged single lady that owns a home. She has her parents own a home. She's looking to upgrade. So what we were able to do is we've put a loan on her 2 current houses. She's buying a new home. This one house is $500,000, one house is $200,000. She's buying a brand new $850,000 with no cash out of pocket, and it's non-contingent. So there is no home of sale contingency. So if you own 1, 2, 3 homes, we have options where you can possibly buy your no home with no money out of pocket, and to the seller, it's a guaranteed cash offer that they're able to take to the bank and be able to close on that property without the homes being sold. Any questions about that? So that's been a really good option because most people in today's market have a lot of equity. The challenge is you're not able to get your hands on that equity until your property sells. This allows you to use that equity to buy the next house. So those would be 2 ways that you can get your offer accepted. Then I guess the third question that comes up quite a bit is, tell me, how can I buy a home if I don't have perfect credit? We get that quite a bit as well. Now, different definitions of perfect credit. Perfect credit really in the mortgage world is 740 and above. Now, the interesting thing is most people don't believe this. We have loan options all the way down to 550 on credit scores. So you don't have to have perfect credit in today's market to buy a home. Now, does it make it easier? Yes, but you don't have to have that. Has anyone ever worked on credit before? Has anyone ever had a scenario they've had to get off their credit or worked on it before? So really the 2 or 3 things to share with you guys if you wanted to get your credit score up. Well, number 1 would be the easiest thing to do would be proportion of balances. So your credit score takes a hit even if you have missed no payments, you don't have any issues. If you owe over 25% of a credit limit, it's going to start to pull your score down. So I know this sounds crazy, but if you owe $250 on a $300 credit card, that's considered maxed out. That'll pull your score down. If you owe $2,500 on a $10,000 credit card, that actually will help your score. So it's $250 versus $2,500, but it's based on the proportion of balances available. So that's one. So one thing you could do is you could call your credit cards and ask for a credit increase. That boosts your score automatically. So there are some easy things you could do. The other thing would be, as you could guess, don't miss any payments. If you missed any payments, you can go back through to see if anything happened erroneously, if they made a mistake, to get those off your credit. I'll have my cards in the back, and Brandon will have that too. If you have a lot of late payments, sometimes the people didn't follow the rules to be able to log those against you, and you can get those off. You can get those off through a professional. We have some professional credit repair companies that we work with that are really good at getting things off your credit. So don't miss any payments and keep those balances down. The best things to do. Any questions about that? Anything else you want me to hit, Brandon?
Oh, that was great. I appreciate it.
Yep, you're welcome.
I have one specific
Yes, ma'am.
question. We own our home and we might or might not consider selling it.
Okay.
Just because it's in a desirable area right now.
Okay.
We could probably make money, but then where would we, it's one
Right.
question. But my husband worked for the same place for 34 years, but then he took a new job in December. And I
Okay.
just wondered how long does he have to be at the new
Oh yeah, good
job?
question. So is it hourly or salary, the new job?
Salary.
Yeah, so he could start, we could use that to qualify you immediately.
Okay, all
Yeah.
right. Okay.
So the 2 years really gets into if you become self-employed, they want a 2-year track record, or if you go to a variable income, like if he was all commission or part of his was commission, they'd want to see a 2-year history of that. But if it's salary or hourly, we can use it immediately.
Okay, great.
Good questions. Yeah. Anything else? Okay, thank you.
Thank you, Matt.
Thank
Appreciate
you.
it.
Appreciate that.
So heard from the lending side. Now we've got a title company that's represented here with Yvette Meldrum with Mid-State Title and Escrow out of Franklin. And she's going to talk to us a little bit about the title process and some commonly asked questions when it comes to title.
Well, I have to say that after following Matt, that is pretty high bar that he has set. I should have tripped him on his way up here and gone first. So my name is Yvette Meldrum. I'm a title attorney in Franklin. I've been doing this for 30 years. And so I think that that's often one of those things that's kind of inhibits you a little bit because you're so deep into it that you don't realize the everyday common questions. So one of the best things that happened to me was having my oldest get married and buy a house. So I got to remember, oh yeah, these are the things that you need to understand and know in going through and doing that. So one of the very first questions that we had is, he's like, well, isn't this like a car? Don't you just, isn't that what you're doing at work all day? There's a house title and we're just gonna go ahead and give that to the new home buyer? It's like, no, that's different. So it really is, there is a deed that transfers title to the property, but that doesn't mean that there's nothing else out there. So we actually have to do a title search to make sure what has happened to the ownership of that property during the time that person owned it and previous people in the chain of title. We actually go back and do a search to look at everyone who has owned it for the last 60 to 80 years. So one of the things that can happen is husband and wife own a property, husband and wife gets divorced, wife quit claims the property over to husband. She says, I'm quit claiming any title. I kind of equate it to, we're here in March Madness right now, no foul, it's not me. So I'm not claiming that I have title to the property at all anymore. However, in the divorce decree, maybe the husband was supposed to pay the wife money, part of the equity, and that might not have happened. So that's one of the things that could be a cloud on the title, that could be a lien on the title. Maybe the husband hasn't paid his taxes, and so there could be an IRS lien, so that's something else that we're looking for. They might have a mortgage. They were with Matt back in happier times when they were married and just bought the house. And so they could have a lien on the property for the mortgage from when they bought it. So we have to make sure that that's been taken care of. Property taxes, another item that needs to make sure that could be a lien on the property. Homeowners association, if anyone's ever lived in an association or a property that's managed by an association that has homeowners association dues, they can file a lien against your property. So there's all kinds of different areas to where we have to make sure that title's clean. So it's not just taking a piece of paper and handing it over to the new buyer. There could be other pieces of paper that are out there that have encumbered and put mortgages on the property or liens. So those are one of the things that we have to look for. Then another common question always is, well, how should I have ownership of this property? So in my example and walking through this with my son and his wife, I recommended that it be titled to both of them as husband and wife. That way if something happens to one of them, they lose their life in a tragic blimp accident, that the surviving spouse has the property and they don't have to go through probate, and no creditors can attach to that on there. So that's a way to hold property title, is by husband and wife. If they weren't married, they could also still take title to property as joint tenants with rights of survivorship. So that's the same thing on there. It's just going ahead and something happens to A, it automatically is owned by B. So we don't have to go through probate. So it's possible to do it as if they were married, gives them that same rights and responsibilities on there. Another way that you can own property is called tenants in common. Usually that's going to be if it's a situation of where maybe people are buying a piece of property to do it as an Airbnb, for example, or if they're doing it as a business, such as this, where an office is. And so they may not be married to each other, so that's not an option, but they're doing it as a business venture. And so we're gonna go ahead and title it to them as tenants in common. That way, partner A has 50%, partner B has 50%. It can even be different. Somebody could have put more money into the transaction so that it could be divided up into different percentages of ownership that way. Sometimes people too are higher net worth. They want to go ahead and have it as tenants in common because of estate planning purposes. And those are people who are usually $11 million and higher. So I'm very happy for you if that is your category, and we can always talk about that, but that doesn't apply to a lot of people. Another way to do it is in a living trust. Some people go ahead and put property in a trust. Usually people who are at a possibility of being sued. So quite often, attorneys, we put our properties in trust, doctors, things like that. Somebody who is out there in a profession who may have the possibility of having a lawsuit happen that could attach to their assets. And so they go ahead and they put that property into a trust. They also do it too for estate planning purposes. That way they can create generational wealth. Owning real estate is an amazing vehicle for investment right now currently, and I don't know how long this is going to happen, but currently in a year's worth, a gain in Davidson County has outpaced the average salary. A gain in real estate in 1 year has outpaced an annual salary. So this is a great way to go ahead, and if you're able to get in and purchase property right now, as I said, I call it generational wealth. You can change your family tree, and putting it into a trust is a way to go ahead and do that. Having title insurance is another great thing, and I have a handout here that I have with me back there along with my business card as well. And so talking about title insurance, if you're gonna have a loan on the piece of property, a lender's gonna wanna have title insurance. So it's just an insurance product that ensures that that title search has happened and that there's no liens or encumbrances on it. The lender's gonna want it. They put money into it. They wanna make sure that if you don't pay, they take the property back, that they have the ability to sell it to somebody else, and they're not gonna get the surprise of, you know, the unpaid tax bill, the unpaid IRS lien, anything like that. It's a one-time payment for the title insurance. Unlike homeowners insurance, of course, which you have to pay every year, it's a one-time payment that's done at that closing. And also it protects your heirs. So it's for the entire time that you own the property, and if you pass, then and your heirs inherit the property, it covers them as well. And usually I would easily 90 to 95% of all of our transactions, someone purchases an owner's title insurance policy. So that lender's policy I talked about is only going to insure the bank. But if you get an owner's policy, that will insure you as a homeowner as well on there. So that gives you peace of mind that somebody's not going to come knock on your door and say, hey, I'm a long lost heir of this property. You know, my great uncle owned it and I should have inherited it and you need to get out. Or the IRS sending the nasty letter to the previous homeowner that's coming to your property and saying, we're getting ready to seize this property, because that has happened. So that was a lot of information, very, very quickly. Any questions on anything? Kind of want to keep it kind of general to begin with on there. Closing process. So when you sign the contract and the offer is accepted, the real estate agent, Brandon, would go ahead and send in the title or the contract to us. We would open up a file and we would order that title search, as we talked about. And so while that's going on, we're also reaching out to the seller to get their information so that we can order any payoffs. We can go ahead and clear any homeowners association dues and ordering that statement, making sure that the taxes have all been paid. And then we're going through in the terms of that contract and preparing the closing documents accordingly. So that sales price, putting that in the closing statement, your earnest money, giving you credit for that, prorating the property taxes, anything else that's been agreed to in that contract. We're preparing the closing documents for that. If you're doing a loan, we're also in communication then with the lender as well. So sending them the title work, letting them know how much property taxes are. They're likewise reaching out, getting your homeowner's insurance so that escrow account can be set up, because typically you have an escrow account that you're going to pay a month's worth of taxes and insurance into with your monthly payment. And then when those property taxes become payable every year, when the homeowner's insurance renews, then your lender pays out those items there. And so we schedule the closing and we sit down and we go over this huge stack of documents, and it's not that bad. That's usually what I hear from everyone. Oh, this wasn't as bad as I heard. It wasn't, you know, a 2-hour process. Takes a little bit of time, but not too bad. And we go through and answer any questions. And so we make sure, is this the terms that were in your contract? Is this your interest rate that you're supposed to be paying with the lender? Was this your understanding of what your monthly payment is? Is this how you want to hold title? You know, we go through those different options to make sure that's how you want to have the deed prepared. once everything is signed, we go ahead and record that new deed, and then we send that to you so that you have that for your ownership records on it. And then we also receive phone calls quite often from people saying, hey, can you send us a copy of our closing statement? We're getting ready to do our IRS taxes, and I need to have that information. So we keep all of that in our files so that we can help you with that during your term of ownership. And then when you go to sell the property, you can go ahead and turn in a copy of that owner's title insurance and receive a credit for that. So it's a little bit less in issuing the new policy for the new transaction. So that's kind of the closing process of how that all happens. Gonna toss it back out here again. Any questions?
Have you ever had a case where you did a title search and like 2 hours before your signing process, there's a lien put on it, and how does that work out?
Absolutely. So it's called down dating. So we've done that initial title search when that contracts came in. When we get the lender order, we update title again, see has anything happened. Register's office is open, Monday through Friday. It's receiving in documents. Yes, so in the instance that I immediately thought of, it was a married couple who the gentleman didn't let his wife know that he owed a little bit of money to the IRS, and that morning of closing, an IRS lien was filed and they were getting ready to sell the piece of property. And the IRS typically doesn't file a lien on a piece of property unless there's a little bit of communication beforehand. But for whatever reason, he chose to kind of keep that to himself. So thankfully, we had a title search update, down date done right before closing, and so that closing stopped so that we could get a payoff and pay off the IRS so that new homeowner wouldn't be moving boxes in as the IRS revenue agents were trying to put locks on the door on there. So yes, that does happen, unfortunately. Yeah. Any other questions? Well, thank you very much for letting me be here. As always, just reach out anytime with any questions, and I am happy to help. Thank you.
Thank you so much. Next, we have a very important part of purchasing a home, especially is the home inspection, making sure you're getting a solid home. And we've got Dave Ganatra here with House on the Rock to speak to us on home inspections.
Hey guys, how y'all doing? I'm Dave Ganatra. I'm with House on the Rock Inspections. We're a local home inspection company that's right out of Thompson Station. So what's a home inspection and why should I get one in this crazy market? So with all these competitive offers and people paying over asking, having no contingencies, home inspections are starting to become that weird ground of like, do I really need one? Is that going to make my offer not as competitive or not? And so as the market's kind of changed, we've had to kind of pivot with it and change too. So we do a lot of pre-contract inspections where you're seeing the house for the first time, you like it, you've talked to Brandon and said, hey, we want to put an offer on it, can we go see it one more time? And that's when you sneak us in, and we kind of act as a family member, a friend, or a home inspector, depending on the listing. And we kind of just go through some of the bigger items. So the goal of this is where you buy this investment and you put in money out of pocket, and then you move in on the first day to find out it needs a new HVAC, it needs a new water heater. All of a sudden you're getting hit with a couple $1,000s worth of repairs that you kind of know when you're buying an older house that you might get hit with, or like say it's a 10-year-old house, but you're not thinking about these immediate costs of like, right as I move in, right as I unpack my boxes, I'm gonna get hit with it. So the goal for a home inspection for us is to just kind of help you educate on the property that you're purchasing. When you move in, are all my toilets flushing? Is anything like any sewer backups happening? And if it's winter months, is my heat gonna keep up with it? We run into a lot of issues right now where because the market is hot, like back in the day, people would say, I'm about to get ready to sell my house. I gotta fix up my house before I sell it. Nobody says that anymore. Now they're like, the market's so hot, it's gonna sell no matter what. So a lot of times people do a lot of cover-up jobs nowadays. So you look at it, looks pretty, or the one from this week was funny. The water heater was leaking. Since they're fixing the water heater, they built an encasement around it and they hit the water heater, right? And so unless we would have gone in the crawl space, so we're not legally allowed to take anything off the walls because it's called damage of property. But when we went in the crawl space, there's literally a dripping leak just coming in from the water heater leaking. So now not only do they have a water heater problem, but now they have structural problem because they let all of that structure rot out underneath the water heater. And so this buyer who, they were buying this $300,000 house in Lewisburg, did not have $5,000-$6,000 to fix right after. So even though the contract stated as is, they clearly did not disclose that the water heater was an issue. So they were able to go back and negotiate the water heater part out. So sometimes home inspections are looked on as like we're the deal killer sometimes, but our goal is to protect the buyers and to make sure that when you go in there, you are very understanding of the fact that, hey, these are my expenses that I know of, and granted, surprises do happen, but our goal is still to kind of keep you as educated in that process as possible. So when you go in there financially, you're secured on, hey, I paid for this house, and if I'm gonna pay 10 grand over, I have some money left over to do these repairs. Because the last thing we want is you walk into a house and you can't live in it, you can't use it, because again, if it's really cold and you can't afford to put a new heat system in there, you're not gonna stay in there much longer. So our biggest goal is to kind of protect our buyers and make sure the transaction moves along pretty well with it. Normal markets, sometimes we go to a house and people are like, we know it's bad, but we're not there to judge. Like, you know, we understand that everybody has a different need. So part of my training process for my guys is, you might come to a house that's really rough shape, but your dad, your husband, somebody in the family is a contractor, and you're gonna get fix all of it. So we're not really there to judge. Like, if that's the house you're wanting to buy, we're there to make sure that you're getting a list of things that you know what to repair on. So does a bad house, or house that's just needing a flip work, any of that need a home inspection? It just really depends on your look. If you're gonna go in there and gut the whole thing, probably not, because you're gonna fix up whatever that pops up. But if your goal is like, I'm gonna move in here, stay here for 2 years, and then fix it up, probably, because for those 2 years, you wanna make sure, if you have a high mold sensitivity, you're not in a house that has a lot of mold. Or another one this year in January, we went in with the couple skipped a home inspection because of the crazy market, and they had us come in after buying the house. They had old plumbing pipes that were leaking in the crawl space. And so that became a $14,000 repair that they weren't mentally planning on, but they luckily had the funds for it. But nobody wants active sewer coming down, right? So just a lot of things come up. So our goal again is to protect your purchase and make sure you know what you're buying, basically. Normal market, the other things that happen is once you get a home inspection, typically you're able to go back to your realtor and say, hey, I want to negotiate this. It's also a way to kind of help negotiate either the repairs or the price, or get funds towards title or closing costs, things like that. And so nowadays we don't see a lot of that, because they're like, you should be just thankful that we're letting you buy this house. The market's pivoted a little bit. But it's starting to, at least it's feeling like it's starting to go back to a little bit of normalcy, where people are doing a lot of now pass-fail inspections. I don't know if you've heard of that term, where you're basically saying, I'm not gonna ask for repairs, but if something big comes up, I reserve the right to say, I don't want it. So if there's a massive foundation issue, if there's a massive issue of some sort that you're like, I don't wanna deal with this. A good example recently, somebody needed a brand new roof, and the insurance company had already turned down the current homeowner on a claim, and the new buyers didn't wanna put a roof on it. So they used that to get out of the house, saying we don't want to move in and buy a brand new roof. So whatever that reason may be, you get the pass or fail. So you still have the stability of knowing what you're buying. You just can't ask for the repairs, and that way you can make an educated decision on, do I still want this? So that's basically home inspection in a nutshell. And depending on where you're buying, a couple of things that you want to consider apart from a home inspection is if you have a septic tank. There's a lot of houses here that have septic. Consider getting a septic tank. Septic problems aren't fun to deal with, so that's usually the best $300 you'll spend apart from a home inspection. It's just making sure when you flush that toilet, it stays going down, it doesn't come back up. So that's usually the only other thing that we tell you to inspect. If you buy a house that has a swimming pool, that would be another one we tell you to inspect. And then the only other one, which is usually the cheapest but the best bang for your buck, is the pest control, which is termite. So depending on your lender, sometimes it's required, but termite letters are like $65, and they basically come and check to make sure your house isn't getting eaten up. And if usually there's termites, it's not very expensive to fix it, but the longer you wait, kind of like a toothache, the more expensive it gets, because they do a lot more damage. So Typically, if you call us, we're able to schedule all of that for you. In the state of Tennessee, a termite inspection has to be done by a licensed pest control company, which we are not. And so we work with a lot of them, so we try to get it all lined up at the same time if you're interested in any of that. But again, it's all about giving you information. Questions? Well, if you guys think of anything, also have business cards back there. Would love to help you guys. And if you're ever in the field and you're like, what am I looking at? Text us pictures. We'll be happy to help. But, all right, guys.
Thank you so much. So we've heard from the lender, title company, the home inspector. Now I want to talk about the just the general real estate process. A common question I hear is, how do I win an offer in this market? Matt Helton talked a little bit about this, about how to win an offer. We know that it's a seller's market right now. There's buyers coming here from all over. Middle Tennessee is a popular area. The market across the country is just flooded with buyers, it seems, and not enough listings out there to go around. So how do we compete? And so I got like 5 tips to how to compete with these offers. And the first is to waive as many contingencies as possible. These contingencies are appraisals, home sale contingencies, inspections, things like that. Dave gave us a great option to be able to have before we write the offer, to have an inspection done, so you know what you're getting before making that offer, to where you don't have to have your offer contingent on the inspection. You've already had it done. Or you can do a pass-fail inspection. This looks a little bit better to the sellers. It's like, okay, well, they're not going to ask for 87 things to be fixed. It's just going to be pass-fail, and we can move on. Waiving appraisals. That was something that Matt talked a little bit about. Waiving the contingency on home loans, not having to have that as a contingency with the cash offer programs that are out there. Lots of ways to do that. Number 2 is to send a cover letter. Sometimes the sellers don't get to read these cover letters, depending on the listing agent and the way they do things. But it never hurts to send a cover letter introducing yourself, telling the sellers a little bit about you. Make some comments in there about what you like about their property, how that property will be good for your needs and for your future, and just kind of touch their heartstrings. Number 3 is to offer the sellers what they need most. So if they are looking to move into a new build and maybe there's a delay in their closing, having a temporary occupancy option for them to be able to stay a little bit longer after closing so that they can secure their next property. Or if they're selling this house to buy somewhere else, they might also want that temporary occupancy. Extended closes are another thing. Most sellers want a quick close, but some of them out there want an extended close. So I like to call the agent that's listed the property and say, hey, what are your sellers most looking for, so we can write the best offer for them. Number 4 is the cash offer program through a partner lender. Again, I said Matt Helton talked a little bit about that cash offer. You can get even if you're financing, so that's pretty awesome. And number 5, my 5th tip is to don't give up. The first offer, you may not win. The second offer, you may not win. The 11th offer, you may not win. Just don't give up. One thing I've seen happen that's been really, really awesome is when a property goes off the market and then for whatever reason the offer falls through and it comes back on the market. I've seen that be a very great opportunity for buyers because it has a little bit of a stigma with the property. Why is it back on the market? So if you do your due diligence and we look at the property, that's a really fantastic way to not have that immediate competition up front. So we're going to do our best to secure you a home. And so never lose hope, never give up. The right one will come along, and that door will be open for you. We just got to do our best. Another question is, so I want to buy a home, where do I start? What's the first step? And I always say the first step is to give me a call, because I'd love to hear your story. I'd love to hear what you're looking for. And then the first thing I do is give you Matt's number, or get you in touch with a lender to get started on your pre-approval process. Because the first conversation needs to be with the lender. You need to know how much you can afford, what your timeline is going to look like. You might talk to Matt Helton and be like, oh man, I got to wait 6 months to build credit, or to get job history, or to do X, Y, Z. Or he might be like, oh yeah, I got you pre-qualified. This is what you need to do to send in to get pre-approved, and then you can go shopping. And so getting that pre-approval letter is the first step, and then we begin your search. We can figure out exactly what price point you're looking for, what you can afford, get an idea of what your monthly payment would roughly be, what you're comfortable with, and shop within those means. And once we begin shopping, this market, things move fast. So as we see properties we like, it's kind of like you got to jump on it quickly. Some properties have a deadline. We're going to have it on the market for the weekend. All offers are due Monday. However, they can accept an offer at any time. So even though they say all offers due Monday, you might find out, oh, they're already under contract on Saturday because they got an offer they couldn't turn down. So we've got to follow the rule of time is of the essence when it comes to these situations. So finding that home and securing it as quickly as possible in this market is kind of how it goes. And so I always encourage buyers to, as you see something, send me a text immediately. If you see, if it's in an email I sent, or if it's, if you were just like clicking on Zillow, or please don't use Zillow, but if you happen to open it up and see something on there, and just shoot me the address, I can look it up, see if it's still active, see what's going on, reach out to the agent, see if there's any offers on the property, and see if we can set up a showing to make sure we don't miss it. Many properties, they're going under contract with multiple offers in the mix, which means in order to secure a property, we've got to be quick and aggressive. I think Matt talked a little bit about the appraisal, waiving the appraisal gap contingency and things. I want to talk a little bit about the appraisal gaps and give you an example of how that works. So if you don't have the ability to completely waive the appraisal because you don't have the money, the cash sitting there, you can do a appraisal gap, which allows you to cover a certain amount over the appraised value. So let's say you wanted to offer $420 for a house, but the appraisal comes back at $400. If you had a $20,000 appraisal gap contingency, if you had that extra $20,000 just sitting in the bank in savings or in investments, and you could cover that amount, you could do an appraisal gap, which just makes your offer look a little bit stronger. So if it does appraise less than your purchase price, you'd be able to cover the difference. And that's something you'd want to talk with the lender about. Make sure they're aware of what's going on with that, so they don't see this random number show up and be like, where did you move this money from? Because don't transfer a lot of money once you get pre-approved. But these are just a couple tools that you could possibly use when dealing with offers to make them stronger. And then the other question that I hear frequently is, this market's so strong. If I want to sell my home, do I really need an agent to help me sell my home? Like, what do they really do for me? In this market, I can put a sign in my yard, it'll be sold tomorrow. What does an agent do for me? So first of all, I completely understand the desire to want to save as much money as possible. I understand that feeling, like, oh, if I don't have to pay an agent, then I can save a lot of money. I do, however, want to bring your attention to the amount of money that you might be leaving on the table if you don't use an agent. If you don't have somebody representing you, fighting for you in those transactions, you might be leaving more on the table than you wish you could. selling homes is something that I do every day. I work with buyers and sellers all the time. It's my profession. We have tools, we have knowledge, and the expertise to ensure that you have your home listed at the right price, marketed the right way, to the right demographics, to the right locations, so that it's getting in front of the right people that are going to make those offers on your home. From staging to professional photography, effective targeted advertising, we're being sure that your listing is in front of the people that are going to bring the most money, and to have those multiple offer situations to get you the best offer. Not to mention, as we're negotiating these offers, we want to be sure that we don't have any hiccups come up. So as I get offers in and I put these spreadsheets together and present these offers to the sellers, I want to make sure that you see all the possible things that could go wrong with each offer between now and the closing table. Because sometimes an offer might look clean, but there's hidden verbiage in there that might allow loopholes where a buyer could be taking advantage of the seller in that situation, and having ways to get out of contracts that you might miss. So it's important to understand some of the things that you might encounter. So I'm here to be your guide, to be your advisor, and help you out in the sale of your largest investment. Also, I want to mention that we do get paid off of commission, but I want to be here. I will be here for you past the end of the sale. It's not about the single sale. My goal is to be your advisor and to help you out through your whole real estate journey. That's why I was so excited to put together this class, to bring in other professionals, to be able to educate the community, both here in this room and then also as we post this video and share this with others, to be able to educate you and help you out all along your real estate journey. So we're all here. We're here to serve, educate, and help you out. If you have any questions, feel free to reach out to us. Again, our cards are in the back. Definitely give us a call, shoot us a text if you have any thoughts. Come talk to us right now afterwards if you think of anything that you'd like to ask. We love to help you out in any way we can.